No matter how much the politicians will tell you that they will bring the affordability back in the Canadian housing market, but the truth is it's not coming back anytime soon. And this is what the Oxford Economist has published in their report, where they are telling us that the affordability may not be back until 2035. Despite all the rate cuts announcement from Bank of Canada, despite all the immigration cuts, and we're expecting close to 4 million people leaving Canada, we are not seeing affordability coming back into this country. And the reason is there's so many variables when it comes to real estate market. Okay, even though we're seeing a chaotic situation in the GTA pre-construction market, where pretty much a lot of units are sitting empty right now because the condo market is predominantly purchased by the investors, and those investors was counting on the continuous influx of the new immigrants who can actually rent out their 400 square foot condo unit. That immigration is now slowing down, and basically the rents are coming down as well across the country. So those investors are now seeing a negative cash flow asset. So all of those investors are looking to offload that inventory, not finding any buyers in the market. Sorry for the interruption, guys. Please, if you like this content and you get any value out of it, please subscribe and like this, because it will help my channel a lot. Thank you very much. Enjoy the video. Even though the Bank of Canada has announced, multiple series of rate cuts already, and it is also expected that in December another 50 basis point rate cut is coming. RBC is saying it's pretty much done. So despite of all the rate cuts and announcements, the market is not moving. There is some activity happening in the resale market, but the pre-construction market is literally not moving in Toronto, in Ontario. BC, a little bit different story, but in Toronto, which is a major hub of Canada when it comes to housing and immigration influx, that market is not moving. In fact, the condo market is literally crashing hard. So with all of these things, why Oxford Economist is telling us that the affordability is not coming back? Well, two things. We have seen that Bank of Canada has announced the rate cuts, but Bank of Canada can only influence the variable rate mortgages. Okay, they do not influence the fixed rate mortgages, which is basically influenced by the bond market. Okay, and let me just tell you about the fixed rate mortgage market, and then we will go into the bond market. So the whole mortgage cliff that we were talking about for the last 6 months, that there will be a huge amount of mortgages going to be renewed in the next year or so, and those mortgages were secured at a much lower rate. That cliff is somehow avoided because now the rates are coming down, but the fixed rate were already lower than the variable rate mortgages, right? So the variable rate mortgages were coming down from 6 plus. Okay, to some extent it was touching 7 as well, and then from 7 to 6.5 to 6 and now 5.5. They're still higher than the fixed rate mortgages. A traditional fixed rate product is hovering around 5%, maybe 4.7, 4.8 you can get it if you have insured mortgages, but from an uninsured mortgages you may be getting 5% plus minus. Okay, so the fixed rate mortgages are already lower than the variable rate mortgage products, which is what Bank of Canada is trying to bring it down. But the majority of the existing mortgages are actually locked in a fixed rate mortgage product. So when the rates on the fixed rate mortgage products are already lower than the variable rate mortgages, then those rate cuts and announcements from Bank of Canada is not going to do anything to move the market materially. It may change the sentiment, in terms of the buyers and the sellers thinking, oh, the rate cuts are coming, maybe something will happen which will push the market up. That could be a sentiment shift that the people will actually absorb and then try to do something with that. But in reality, the rates, the true borrowing cost, is not coming down. And if you look at the 5-year Canadian bond yield, we realize a long-term trend has been broken already. Okay, all the way going back to 80s, we were seeing a downtrend all the way down to like 2020s. But then after that, that long-term trend has been broken. I'm not a technical analyst expert, but I can see that the trend has been broken, and the probability of having this 5-year bond yield going up is much higher compared to going lower. So when you see that, and when you combine the depreciation of Canadian bond, okay, you can predict very easily that where the borrowing cost is going to be further down the line. Okay, so maybe by next year there will be some reduction in the variable rate mortgages, but the fixed rate mortgages may not go down below the current level. And then over time, it is likely to go up because of the future inflation and growth expectation. Okay. Sorry for the interruption, guys. Just wanted to let you know that I also offer one-on-one consulting calls to the individuals who are looking to discuss their financial planning, their investment strategies, their kids' education planning, their immigration moves, as well as the young professionals, because I have been in the tech industry for almost 20 years. So I also offer one-on-one consulting calls to the young professionals who are looking to have their career development discussion with me, and also personal branding as well. So if you are looking to have some sort of an expert opinion, there is a calendar link in the description below. Book a 30 minutes call with me and I will be more than happy to help you out. So the Canadian economy is going through a rough patch. At some point it will hit bottom, and from there it is going to go up. Okay, so when it rebounds, then the rates are going to go higher. Okay, both fixed and variable. So thinking about the rate cuts from Bank of Canada is going to bring the borrowing cost down. It's like living in a fool's paradise. There will be a short-term blip in the variable rate mortgages when the Bank of Canada is done with the rate cutting cycle sometime next year. From there onwards, things will likely change pretty quickly. Okay, and when the economy started recovering, at some point it has to happen, right? You know, we're not going down the hill and then collapsing. Okay, at some point the economy will hit the bottom, it will rebound from there, then we will see the growth, and the inflation expectation will push the rates up, especially on the fixed rate mortgages. And then this will also put Bank of Canada back on the tightening cycle. The whole affordability thing is a myth. Okay, we may not see in the major metropolitan cities. Yes, in the cities like Calgary, Edmonton, Regina, you may find the affordability there. But in the major cities like Toronto, Vancouver, Montreal, Victoria, we're not going to see the affordability anytime soon. Okay, until the income growth catches up, we're not seeing the house prices collapsing, especially in the single family housing market where that inventory is already very low. We're not seeing a lot of new units being developed. We're not seeing the new supply coming up. We're not seeing the new projects starting because of the housing starts collapsing. When you have this scarce product, you don't see the prices are collapsing in the short term. So what's next? Should you buy or should you hold? Well, it all depends upon your own personal situation. If you are buying for your own self, that you wanted to live as a primary residence, then you should buy, because you have to grow your family. There is so much beyond just an investment perspective. Okay, but you are only buying it as an investment property. I myself wouldn't do that. The policies are so anti-landlord. I would not put myself going through an unnecessary headache that I can easily avoid, and putting my capital into some other areas like stocks, like AI stocks, technology stocks, Bitcoin. If you are new in crypto and you're looking for an exchange to start crypto journey today, check the link in the description below. I have a link for the Coinbase platform, which will give you $10 worth of BTC for free if you start using my link. And in other real estate markets where I can see more supportive policies for landlord investors like Dubai or some US states. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and it allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. But in Canada, it doesn't make sense for me. But anyway, this is just my strategy. You let me know what you think about it. Put your comments down below. And if you like this video, give me a thumbs up and subscribe, and I'll see you in my next video. Take care. If you are interested in reading about these topics like macroeconomics, financial markets, what's happening with the geopolitical situation, what's happening with interest rate, monetary policy, Federal Reserve, ECB, China, Japan, I cover these topics in a very simple and plain English in a very digestible format. If you like to read about this, there is a link in the description about my newsletter that I send out every week. Do yourself a favor, click subscribe, and enjoy reading. Thank you.